Hey guys, sorry, this is actually a re-record because fuck, I didn't have the fucking audio set properly. So sorry guys, I'm gonna take a fucking sip of water. But yeah, to get to the point, today I want to quickly talk about the price of gold and what I expect for this week. What are kind of the key things that you really want to look out for when trading the gold market for this week, and kind of how I'm planning on personally playing it. Not financial advice, but you know how it goes, all right? So let's take a look at the gold chart here. I mean, I think in terms of price, the key narrative really is, or at least at this current moment in time, one, when are we going to see some sort of pullback or retracement? Because as of now, we've basically had 4 days straight of just straight up bullish action, right? Um, that's the first question. And the second one is, if we do get that retracement, then where are we going to also see a bounce, right? Um, I think everybody is feeling this bullish trend. Although if you look at kind of like the data which kind of showcases the larger institutional interest in gold, it kind of shows that demand is still flat. So it is something that we have to be a little bit hesitant about, guys, whether this is really kind of just like a pure retail push here. If there's really kind of that backing which we need to really get past this 1800 to 1900 level. But I think, especially with the larger narrative of money printing and everything and what we've seen in history back in previous times when the government has printed so much money, I think it's pretty clear that the bulls are still going to hold strong and we're probably going to hit 1900. But just how do we want to really play this, right? Because at the moment, if we look at the hour chart, we opened the day, the gold market opened the day around 1830. And again, since the opening, we've just continued to see this rising trend. We've kind of have these just constant, albeit small, but um, lower highs, right? Or higher lows, whatever you want to call it, higher lows here, 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 and so forth. When we had this initial run up due to the shocking news last week, the data about the non-farm data, right? And then we pulled back, but again, now we're just setting these higher lows. And it kind of looks like, especially on the hour chart, right? Or on the 15-minute chart, these kind of shorter term time frames, we're really seeing this ascending triangle build, and it's been building the whole day. So I wouldn't be shocked if we kind of break through that and start charting towards 1850, right? Um, so obviously, when we start talking about where may we potentially see some sort of resistance, I think 1850 though is really the key level that we want to look for. If we look at kind of the day chart, we can really see, where this rectangle is drawn. Actually, it should be a little bit higher. Oh, sorry, that's an alert that I just moved. Cancel that. It should be more around here or whatever. But we really want to kind of watch this 1850 to 1853 level, because we can see previously in history when we made that, that decline from the 2000 level, we had kind of, 1850 acted as resistance here. It acted as support here, blah, blah, blah. If we look previously over here, it acted as support. So I think this is a real key level that we want to look for. And I'm pretty sure that other traders right now are kind of eyeing this level. I personally have set some sell limit orders at around this price range, though I would be very hesitant, or I would recommend watching out because, at the same time, we've seen the strong momentum. So it also wouldn't surprise me if we just blow right through that, but I do expect that we'll see some bounce there and that there could be a short-term profit to be made there. But in the longer term trend, guys, especially if you guys aren't that experienced trading gold, right? And I'm like myself, um, there's always that key rule which people say, and that's that don't go against the trend. It's that simple. If you don't go against the trend, the chances are much greater for you to make money, right? And right now the trend is bullish. So I think the key thing that we really want to pay attention for is making sure, if we go at the 4 hour, let's say, making sure that we just don't make stupid buys, meaning that, for example, if the resistance is clearly, if there's potential resistance clearly at 1850, don't buy at 1850, right? Especially when we're talking about potentially a 1900 price target, right? If we're aiming for that 1900 level, don't place the buy here. Potentially wait for either that pullback back down here. You can follow my cursor, and then place the buy at a lower level where the risk to reward is greater, right? Like if you buy it at 1820 and then we actually eventually hit that 1900 level, that's much better than if you open at 1850 when there's still bullish momentum and we get that pullback. You're going to have a heart attack because you're losing money, and the risk to reward is much lower, right? So just be smart on that kind of level. Okay, guys. Even if we break past this 1850 mark, you have to understand that markets don't just constantly go up like that. So there's a chance that we may get up and then we slowly go back down, right? Just how like my cursor is following. And then maybe we make that 1850 level support. And then only then when you get that kind of confirmation, would it be smarter to then kind of open a position at 1850, right? But at the moment, I think you should still be cautious at these price levels, which are getting closer to that 1850 point. I do think we'll still break through that, but just be cautious about it. If you plan on trying to open long positions at this higher level, after all of this bullish momentum, just make sure, for example, if we go to the 15-minute chart, oops. Let's say you choose to open a position at 1838, right? Because you see that that's closer to the bottom of this triangle. Open, and then when you get that a little bit of run up, don't be afraid to move your stop loss to break even. So even then, if it actually ends up plummeting and it goes against the TA, well, you just get stopped out for a break even, right? You don't lose any money. That's the smart way to play this kind of market, because then you'll just get the opportunity to place a long position at a lower price, maybe at 1832 or whatever, and then do the same thing. Move the stop loss, break even, and potentially you get that much nicer profit. I think the goal here, guys, is to ultimately get a really, really nice profit from a long position at a lower level. Okay? Don't be silly or don't be stupid about this, right? Try and play the market in a smart, logical way. All right? And that's really the goal. If you're a bull like me right now about gold and you really think we can hit that 1900 level, then why wouldn't you want to have a longer term position which you can really then benefit from later? So be smart like that, okay? And make sure you're setting all your trades have a very good risk to reward ratio, okay? So that's how I'm going to be kind of playing the market. In terms of the macroeconomic narrative that we need to pay attention for this week, the key thing really is about the CPI data coming out on Wednesday, right? CPI data, in case you guys don't know, is correlated to inflation. It's a way to determine if inflation is increasing or not in the current economy. And obviously, from a historical standpoint, inflation and gold are directly correlated, right? Um, because people buy gold as a hedge against the dollar or against inflation. So it's definitely something or a very important piece of data that we need to watch out for. Um, just pay attention for that, particularly on Wednesday. I personally expect that we're going to see like a higher inflation number, which could be positive for the price of gold. So that's kind of what I'm eyeing. But again, if there's anything that last Friday told us, you can get shocks when it comes to the data. So always be prepared. Always be prepared. Be smart with your long positions, right? Be smart in the sense that if you open a long position kind of high, have that stop loss moved up to be break even. Then if the market goes against you, this gives you the opportunity to buy the position at a lower level, right? The long position at a lower level. So that's how I really would try and play the market this week, guys, right? One other key thing to focus on from a macroeconomic standpoint, the dollar sentiment is really bad, right? I mean, I think that's very clear. Yields have been actually dropping from a longer term standpoint. If you look at all the different currency pairs, the dollar sentiment is very weak. And I expect that to really continue this week. It kind of seems like a lot of this economic recovery data that we had seen for the last few weeks, now it's kind of like people are very hesitant on it. So that's only going to make the sentiment on the dollar even weaker. Just pay attention to that. So not only is the gold price, or like, are we getting more bullish on gold because of the inflation data, which seems to be increasing, but also on top of that, we're uh, we're in a position now where the dollar sentiment's extremely weak. So we have two things really working in our favor when it comes to being a bull regarding the gold price. Okay, guys? Anyway, if you guys have any questions, please let me know. I'm happy to answer. But yeah, good luck trading this market, guys. Remember, though, let's get that really big long position profit. All right.